So my presentation has three parts. I'll talk about the current state of investments, number one. Number two is what led us here. And last part would be the recommendations. So if we move to the first part, I have a few slides here. It talks about private investment to GDP and public investment to GDP. The charts are very clear. We are in a declining investment state. So both private and public investments have been dropping. The next slide is credit growth. So if you look at the left-hand side, you have a chart of the private credit, so the amount of borrowing private sector is doing, and also the borrowing by the government sector. So what you see here is that there has been a steady decline in private credit growth over the last decade. So if you go back to about 2015, 2016, 2017, private credit growth was about 13, 14, 15%, and now it has dropped to 6, 7%. In that period, credit to government actually went up. So that takes us to the right-hand chart, where you see the split of credit between public sector and private sector. And it's pretty clear that the public sector has crowded out the private sector a bit. And it also is shown in the data below. Like for example, in fiscal year 2019, the private credit to GDP was 34%. And now it's about 31. So there has been a decline on the private side. This shows the capital machinery import. It's a very similar picture. Capital machinery imports had peaked a few years back. It's now declining. And then we come to the savings rate. Now, savings rate has also been declining, and savings rate of Bangladesh is actually a fair bit lower than our neighboring countries. And it has significance, and I'm going to touch upon that very soon in the next slides. So far, basically, we talked about the quantity of investment, right? We mentioned that the quantity of investment has been coming down. But one of the things I really wanted to highlight is the quality of investment. So we as a country have not given enough importance to that part. And this is a ratio that is used. It's called ICOR. It measures how much, like for 1 taka of growth in GDP, how much investments you are making. So higher the number, basically it's actually a worse output. So if you have a higher ICOR, it means that you are overspending for a little bit of growth. Now, one thing you will see on the chart on the right is you have a couple of countries who have a higher ICOR than Bangladesh, so China and Vietnam, and which are both very successful countries. So you would probably ask that, okay, Bangladesh has a high ICOR, that's bad, I understand, but how come China and Vietnam have higher? And the answer lies in sort of the previous slide, that is the savings rate. So if you have a country with a high savings rate, you're not relying on external investors, external debt, to sort of fund your investment. So what we have is a high ICOR, which means, and just to remember, this is based on the official data. And a lot of people have their concerns about the official data. And even the official data says we have high ICOR and a low savings rate. And that's an issue for the country. And so, the first segment, I end up with this slide, that we have created certain capital misallocations as a country. So if you have slow savings rate, that savings needs to be channeled to investments that have the highest potential ROI. So if you take that money and savings to the wasteful projects, the impact for the economy is quite bad. So I identified 3 of this. So remember, we have low private sector credit growth that I showed. But even then, a number of sectors, steel, cement, LPG, have major overcapacity in the country. So we have created overcapacity in certain industries. On the other hand, we have stifled credit to SME sector. For example, you would know the infamous 9-6 policy of 2020 that really impacted credit growth to SME. Number 2 is that the public investment. If you have wasteful projects, that definitely creates your ICOR to go up, that I mentioned. And then when you are taking debt, when it's borrowed money and then wasteful projects, right, it's magnified quite substantially. And the last part is on the household investment side. In Bangladesh, by far the largest investment asset class is property. And people invest in property for various different reasons. The most popular of that is you can sort of put in undisclosed wealth. There is a ramification of that. Our rental yields are extraordinarily low. And that means if you want to set up a business, the biggest cost of the business could either be the cost of the land or the rent that you pay. It makes a lot of businesses unviable. So So that's sort of towards the last, and I just wanted to put this chart that we have as a country been pretty bad at attracting FDI, and the factors that sort of impact private investments domestically and the factor that impacts FDI, they're kind of similar. So I'm going a little bit fast sort of so that I can sort of spend a little bit more time on the recommendation. So what are the problems, right? There are 4 categories. One is access to capital. You want to create jobs. If you want to invest, you need access to capital, whether it's debt or equity. Number 2 is institutional weaknesses. Number 3 is infrastructural issues. And number 4 is other challenges. So quickly, in terms of the access to capital, we know that currently the biggest problem is the NPL issue in the banking sector. Banks have huge capital shortfalls. So you need this banking sector to have capital to be able to grow. Right now, we understand that demand for credit is low. But the issue with the banking sector is that if demand somehow comes back, let's say after election, there's demand coming back, can the banking sector give that loan? Do they have the capacity? So that's sort of the issue. The SME thing I mentioned. And then the other issue is that if you're a company who have too much debt on your balance sheet, and we know a lot of companies have that, the solution to that is not taking more debt. The solution to that is basically taking equity. And that's where the stock market, the capital market has to function. But that has been also a major, major barrier for a large number of years. And then we also have the high interest rates. That's a cyclical issue, whereas the other issues are structural issues. So interest rates hopefully will come down, but these structural issues that I mentioned have to be solved. Number 2 is institutional weaknesses. Again, nothing new. We know about these things. Policy uncertainty is one, like policies can frequently change. Sometimes the regulations are not conducive to business. It takes a lot of time to get permits, licenses, access to electricity, utility, et cetera, et cetera. The judicial system, like unless you have effective contract law enforcement, doing business gets much, much, much harder. And then finally, tax issues. I think every businessman will talk about this, NBR issues that they face over time. And then infrastructure, there are 2 categories. One is transport logistics. So the cost, if you have a lot of traffic on the road, your cost of transport goes up. Port efficiency becomes another part of that. And the other issue is basically energy. Like you need reliable energy and affordable energy to do business. And the last part is everything else, pretty much, which is political uncertainty or like skilled labor shortages, and then law and order issues. And again, if you think about it, to run a business smoothly, you need pretty much all of these things to be functioning properly. So going quickly to the recommendation side, so in terms of access to capital, so I mentioned banking before. So I think banking, there are a few different things we have to do. We have to deal with the banks that are troubled. That's ongoing. We have to work on recapitalization of some banks. We need to create policies to actually promote capital building and perhaps even bring in some foreign investors to invest strategically in some of the banks. So that solves the capital shortfall problem. And then obviously, to ensure we don't have a repeat of what had happened in the previous regimes, right? We need to really, really strengthen Bangladesh Bank, and that's also ongoing, but there needs to be continuation of that. And then build trust. Like one of the reasons savings rate have been falling is that lack of trust in the financial sector. Like if you start putting your money in gold or US dollar because you don't trust the system, that will automatically bring down the savings rate. So we need to really, really build back that public trust in the financial system. And then I mentioned capital markets. For capital markets, the priorities are, 1, make the government securities market popular. That will allow eventually people to invest more in corporate bonds and more sophisticated bonds. So that's sort of one thing. Number 2 is that get the public issue rules out very quickly. That is a barrier currently to easily enlist the company in the stock market. And the reality is that if you don't have a vibrant stock market, you can't even raise private equity. Like if a company wants to raise equity in private sources, you can't raise without a vibrant stock market. And then obviously the strengthening of the institutions and working on the demand side, whether pension reform, family offices, Bangladesh could have a sovereign wealth fund, for example. And this is the really big one, like the institutional reforms, weaknesses part, right? So what I am suggesting is something that Vietnam embarked on this year. So from the country went on a big project with the goal of saying that, okay, we want to establish private sector as the key driver of the economy. So they put in a number, like this is private sector's current contribution to GDP. I want to take it to that. And to get there, basically, there's a series of things they are doing. For example, like the first one is simplifying business processes and reduce administrative burdens by at least 30% by 2025. So what's key here is that the identification of certain KPIs and certain timelines, like specific timelines. I will do this within this timeline. And there's a few other things like the legal and property rights, land law, so that revising of the land law so that you can get access to land easily, and a few other stuff as well. And then quickly, transport and logistics and energy. Again, I don't want to repeat too much. You just enforce the laws, you just go for modernization, digitization, that sort of thing. And obviously with energy, you have these short-term initiatives and long-term. And obviously, I wanted to mention that we will have a paper on these presentations later on, which will be published later. So we'll have much more depth on each of these issues. And then the mindset of government's investment. So we have a few points here, like instead of doing a lot of mega projects that could be financed through private-public partnerships, you basically move away from some of those. You can basically invest in the infrastructure, soft infrastructure side of things as the government, instead of like building more schools. That's already been taken care of by certain other institutions. And then obviously, one of the issue in the agriculture side, for example, lack of storage, like cold storage and other storages. So that's, if the private sector is not stepping in there, that's where the government kind of step in. So instead of like competing with the private sector, basically get into places which have high impact, high ROI, and the government basically plays a role sort of there. And then also collaboration with the private sector. If you have unused land, the private sector can sort of use that land. So that's basically it. Just to recap, the things we need to be very careful: capital misallocation, like where is capital growing? Number two is that you can't solve investment problem by solving one of the issues. Everything needs to be sorted. You can't have everything else but not capital, or you can't have everything else but not energy. You need to sort of address every sort of thing. And then the Vietnam case study, I think, is a fantastic case study that Bangladesh can consider emulating. So that's all from me. Thank you.